All right, hey, what's going on? I want to welcome you to another episode of Making Sense of the Market. My name is Dan Keller, mortgage advisor at New American Funding, and today is Friday, March 10th. So a lot happened this week. Mortgage interest rates took a turn for the worse. They worsened. I think, like I mentioned last week, there's a lot there's a lot built into the market right now in preparation for the Fed rate hike next week. So in preparation for that, yes, mortgage rates worsened this last week. So you'll see right here, this is about as low as we've been since the election when rates have worsened. So that's where we are. It is what it is. What I want to spend some time talking about today, Dave Savage over at Mortgage Coach, a good friend of mine, and Dan Rawich. I follow Dan Rawich every single morning. He presents and shares mortgage market commentary in regards to what the market's doing and why. They presented some data last week. It was super profound. And what this data basically shares, see these gray vertical lines? These gray vertical lines indicate recessions in the US since 1961. What's unique about this is that the consumers have predicted the last 8 or 9 recessions. So what the consumer sentiment it's a statistical measurement, an economic indicator of the overall health of the economy determined by the consumers, determined by their spending, etc. So take a look at this. This is pretty profound, but the next slide, what I want you to pay close attention to here is this purple trend line. And you may need to watch this over because I'm not going to spend a ton of time on this, but this purple trend line right here is the present economic data. Now get this, the yellow trend line right here are the expectations in the marketplace. When these two lines cross, that is a recession. So if you go back and you look at this chart, when those two lines cross, it leads to a recession. They're not crossing yet, they're getting close though. So I'm not sharing this information to scare you. I'm sharing this information with you so that you are prepping for a downturn. Life is good right now. I'm seeing people spend more than they should right now. They're spending above their means. You should not be racking up credit card debt right now. You should be saving money. Now, I say that, and I bring this book, I want to introduce this book to you by Tony Robbins. The reason why I'm introducing this to you is Tony Robbins got together with the #1 financial planner in America and wrote this book. And it literally is a financial freedom playbook. It's creating peace of mind in a world of volatility. And what Tony says in this book with the financial planner, a couple things that are profound, a couple big things that are profound. One is that we are on a run right now in America, a decent run of 8 or 9 years of growth. Well, in regards to the markets tend to adjust every 4 to 5 years. And so we're due for an adjustment. We're due for a recession in the marketplace, not necessarily in the housing market, but in the economy. So basically what Tony Robbins states in this book is that, one, we're due for that, how to prepare for that, and then more importantly, how to take advantage of that. There's a lot of people that have made a lot of money in down markets and following down markets. So pay close attention to that. I'll keep you posted on that. I don't share that to scare you. I share that to inform you. Here's the other thing. Housing, the NWMLS reports yesterday came out and said housing inventories reach record lows. We haven't seen housing inventory in 23 counties in Washington state this low since 2004. Obviously, that's not breaking news to you, but if you know of someone who is thinking about selling or thinking about making the move, that basically just means now's the right time. You will have a massive advantage in the marketplace. So just recapping, the Dow's continuing its record run. The Fed is going to raise the Fed funds rate this next week, 99% guaranteed. Stay tuned for news on that. And yes, like I said, mortgage rates went up. They're in about 4.25 to 4.5% range in regards to conventional financing, still in the upper 3s, low 4s for government. If you need anything, please let me know. I look forward to being a resource. I want to be your mortgage lender. I want to help you manage your mortgage and help you make smart decisions with your mortgage and with your future money. If you need anything, let me know. Until next week, take care and have an awesome weekend. Bye for now.